Silver jumped over $2 on Thursday and Friday to close at 38.67, with futures closing at 39.08. This has propelled silver to its highest close in 14 years. I mean, that's more than a decade, and silver is still more than $10 from its all-time high. While most people you watch on YouTube are going to focus on price, and that's what they're going to get you excited about, instead, I want to discuss what almost no one is talking about. What's happening right now in the silver market isn't just about price. It's about structure. It's about the foundation of the silver market permanently shifting. This is the actual moment where the game changes. And it's not with a ringing of a bell or the roar of a crowd, but with a deep, silent shift that smart money can feel. I'm going to walk you through 8 structural signals that tell us that this market has changed forever and why this change in silver will make the silver performance and price look nothing like we've seen in the past. What is good, Stackers University? It's Dr. Stacker, and it's so wonderful to have you here with me today. If you stack smarter and you have a love of Stackers University, do me a favor, hit that like button, drop a comment, and don't forget to subscribe. Over 80% of you watching aren't subscribed, and I don't want you to miss what's coming down next. But let's just dive in. And actually, before we really jump into the 8 signals, let's talk about how change actually happens in people and even in markets. Let me tell you a quick story. During my sophomore year in college, I worked for the dean, and during his divorce, he gave me one of the best pieces of relationship wisdom. He said, "Sometimes people change and they forget to tell us." The same can be said about markets. People in markets tend to evolve and change quietly over time. While quick and dramatic changes will always get our attention, they don't always last. Lasting change in people occurs when fundamental values shift, priorities realign, and the perspective grows. The same can be said about markets. And that gap between who someone was or how the market has been can cause confusion, miscommunication, and even grief. As investors, we have to be able to update our understanding of the markets as they change. The silver market has changed. Now it's up to us to notice. And here are the 8 signals that silver has given us. Signal number 1, silver broke a 14-year high. This isn't just another bounce. Silver spot price blew past 38.50 and briefly flirted with 38.75, the highest level since 2011. Really, let that sink in. We are officially in new territory, something we haven't seen since the aftermath of the global financial crisis in QE1. Price is just the tip of this iceberg. This move confirms that a long-term lid has been lifted. Silver isn't reacting to hype. It's not overreacting because of all the other stuff. It's reacting to a structural demand, macro conditions, and a psychological unwind that has been going on for years. Signal number 2, stagflation is the tailwind nobody expected. We're just not in a normal economic cycle. The headlines might say the economy is quote unquote cooling, but if you dig deeper, you'll see the things we talked about in a previous video. GDP growth is slowing, inflation is still sticky, the labor market remains tight, and the Fed is really just conflicted. Some want to cut while Powell's like, no, let's hold tight. We're not flirting with a recession anymore. We're in a full-blown relationship with stagflation. And silver, well, she shines the brightest in relationships like this. It's the only metal with a dual identity, part monetary hedge, part industrial workhorse. During stagflation, silver's industrial demand doesn't collapse, and its investor demand just ramps up, giving it an incredible 1-2 punch. Signal number 3, the sellers are just out of ammo. Last month was a test. We ran headfirst into a danger zone of $35 to $37, and silver held. And that was a big deal because we outlasted 2 key selling groups that were trying to drive the price lower. And I am not talking about the banks, ignore them. Group 1, these were the people that had to sell. People who needed liquidity, got scared, hit stop losses, financial challenges, but they're gone. We've all heard from the local dealers that they were up to their elbows in silver because people were just selling. The second group that we survived was the 2021 silver squeeze survivors. Thousands of people bought $35 silver at the height, and they had to sit on dead money for 4 years. And they finally just got back to even, barely. And that's just not emotional PTSD these people are dealing with. It is true emotional damage. So many of them have exited on this rally, and yet silver didn't even crash. It just continued to consolidate it and absorb. And that's power, that's progress, that's straight up bullishness. Signal number 4, We are in a bullish consolidation, as I've mentioned, not a blow off. Instead of collapsing back to 30 like it has in the past, silver just consolidated sideways, tightening its range, building a structure, as you can see, and resetting itself for another leg up. Think of running a 100-yard dash. Before you can run another 100 yards, what do you need to do? You need to pause, catch your breath a little bit. That's what silver just did. It paused, it caught its breath, and now it's ready to run again, and it's ready to take off like we saw over the last 2 days. Now, also expect some profit taking because there's traders and all that stuff, but they still can't stop this. Signal number 5, price doesn't lead, momentum does. We've said this before at Stackers University, but narrative always follows the price. But what's harder to see is that momentum often builds before either of those can be noticed. You can't always see the momentum in the chart. You have to kind of feel it in the order books, the futures contracts, the ETF inflows, the shifts in language from if silver moves to when silver moves. Momentum is the current beneath this surface, and right now it is absolutely raging. The structure of this market is being shaped by patient hands, long-term conviction, and quiet accumulation. That's not retail, folks. That's smart money like us being fully positioned, ready, not selling, waiting for the best opportunities. Signal number 6, recency bias is finally fading. Here's what held back silver a lot for the last couple of years: recency bias. People assumed silver would keep behaving like it always has. They would say things like, oh, silver never holds 30 or 35, or it always gets manipulated back down. And all that was true until it wasn't. That bias called people to sell soon or not even buy. They're waiting for a certain number. But platinum has taught us something very important. When a metal moves quietly, most investors miss it because it doesn't match the script in their head. We saw the same thing when gold moved above $3,000. Silver's rewriting its script right now. The longer it holds above 35, the more the old patterns break down, and people will start saying, maybe this time really is different. Signal number 7, anchoring bias is creating a new psychological floor. So any silver stacker will tell you that the magic number was always like $35, not because it was mathematically special, but because it was psychologically special. It's where silver becomes real again for most folks. But here's the twist: the mental anchoring that is already working here in the background. Instead of $35 now being resistance, stackers are now treating it like support. People are holding. They're not selling into strength. They're saying, I'm not going to miss this again. This is the anchoring effect in action, and it's powerful. The longer we hover around 37 or 38, the more people will internalize this as the new normal, with 35 as the old new floor and 40 soon to become the new floor, if that makes sense. Signal number 8, delayed perception. The boom is already in motion. I've given you this example before, but you're standing in the distance, you see a flash, but you don't hear anything. Then seconds later, boom. That's how markets move. By the time the boom hits retail investors and retail headlines, the smart money already saw the flash, already got positioned. We're just waiting on the sound wave to hit everyone else. This is what is called delayed perception. And so the market lags in these situations and it's waiting for a message. And when they finally get the message, it's going to be too late for folks, especially if you're interested in the mining stocks. This is a great time. We'll save that for another video. But anyway, don't be that person. Don't be the one who saw this breakout, knew it was coming, and didn't position yourself. Don't wait for confirmation. That's going to be too late. Position yourself now. So, where do we go from here? It's not just about what the charts are doing. It's not just about what the price says. It's about what we've already survived, what has already changed, and what's actually being built underneath the surface right now, behind the scenes, the structural changes to the silver market. People and markets often shift, and they change the same way, quietly, slowly at first, without telling you or making an announcement. The change is here for you to see if you want to look for it. So don't focus on price. Focus on the signals that silver is giving us. That way, you'll always stay ahead of the curve And that's how you catch the big waves, the big price movements, the easy money. In the comments, have you noticed a shift in the silver market? Which of these 8 signals do you think was most impactful? And have you been stacking this week? If so, what did you buy? Or simply put an A+ in the comments if you received any value, love silver, or want everyone to just know that you always stack smarter and never stop learning.